FDIC requirement that they're going to actually increase the lender requirements for deposits relative to loans that they are giving if you have less than 20% down. Let me say that again. The FDIC, the federal government, is going to require banks, pending this approval of this regulation, to have more money in their coffers as a ratio to loans they're giving that have less than 20% equity. So basically that means, for the most part, that means first-time home buyers. First-time home buyers, basically in low-income home buyers, starter homes, effectively. So let's go to the coalition of industry advocacy groups have written the Fed, the FDIC, currently strongly urging not to raise capital standards for bank-originated mortgages with down payments below 20%. The letter was signed by the National Housing Conference, and we're looking at their website now, the NAACP and the Urban League, the Mortgage Bankers Association, and the National Association of Realtors, NAR. So again, they're going to try to hike the capital standards for mortgages with down payments below 20%. This was issued last week. Housing groups warn proposed capital standards undercut efforts to close racial home ownership gap, or just basically home ownership gap for anybody that's kind of like a first-time homeowner that doesn't have that type of 20% down payment. So my first concern about that is if the FDIC/Fed wants to raise the capital standards, raising it slightly isn't going to really make a difference, as far as I'm concerned, if there's a major downturn and those banks lose all their equity. But it also says to me that somewhere deep in some federal government study somewhere, they see real vulnerability for these lenders in the residential housing market, right? They're seeing like, whoa, warning, flat. This kind of looks like 2008. You better increase your capital standard. Of course, they don't want to come out and say that because that could almost be a self-fulfilling prophecy, right? In the same way that everyone thinks there's going to be a recession, so a recession happens. If you go around actually saying that the banks don't have enough money on deposit, then all of a sudden that becomes true, right? Because people lose confidence. It's a confidence game. It's a confidence game. It is a confidence game, right? A confidence con is almost what it is. So here it is. Here they are. If these standards are adopted, they will be devastating in their impacts to increase black homeownership and disadvantage all first-time and, in particular, first-generation home buyers. I think that for me, let's just set aside the racial component of it and just focus on all first-time and first-generation home buyers, regardless of the color of your skin. This is bad for everybody who doesn't have 20%. And it's also, as I said, it also says, whoa, somebody deep in the federal government is sounding the alarm on these lenders. The FDIC noted in its own report on down payment and closing assistance, for many low-income and moderate-income people, the most significant barrier to homeownership is the down payment. We all know that. Since the first quarter of 2020, the median home sales price has skyrocketed. We're aware of that. New standards also undercut the Community Reinvestment Act and Fair Housing Act, encouraging banks to maintain branches in underserved communities under the Community Reinvestment Act while discouraging them from offering very products needed in those communities is perplexing and ironic. Well, of course, that's the never-ending wisdom of the federal government. They say one thing and do the other. It's the law of unintended consequences. You remember the Community Reinvestment Act was actually one of the reasons why we had 2008 financial crisis, because the federal government encouraged lenders to make loans that they shouldn't be doing, right? But of course, Barney Frank told us that there's not going to be a bubble, right? Remember that? Remember that famous quote? There's not going to be a bubble. There's not going to be a bubble. Inflation is only transitory. So I'm concerned about first-time home buyers. You should be too. I mean, how do we get, because the inventory at that price range is exceedingly thin, and if that's not good for society, if new people cannot buy a house, can't get their first house. If you're 32 years old, married with 2 jobs, and you can't buy a house, and maybe there's a bambino on the way, that's not good for society. That's really bad for society. Unstabling. Destabling. We'll go with destabling. That's disabling. You know what I mean. For society, that's really bad. That's real bad for society. And in so many ways, people have a lower ownership stake in the country they live. That is not good. Not good. You've got to have a way for young people, families. I shouldn't say families because you don't have to have a family to buy a house. You got to have a way for young people, first-time home buyers, to buy. You just do. Otherwise, your society is headed in more like a European direction, where, especially like Germany, where everybody rents, and that's not the American dream.